Hello everyone, myself Vaibhav. In today's session of Market Movers, we will be taking a look on the Euro USD's technical aspects, as per which I think the Euro USD is going to go past even the 1.2 levels in coming sessions. So we will be looking at its possible trajectory and try to see if there are any emerging opportunities for us to get involved for the long side trades in the Euro USD. In today's session, we will also be seeing what kind of political and economic developments are happening around the world which are going to impact the trajectory of these important financial instruments. So if we consider the trading context for the day, earlier in the day we got the IFO business climate indicator for Germany, and as expected it has dropped to the 90.7 levels, and I think this is pretty much in line with the expectations given the backdrop of renewed restrictions being placed on the people's movement, and as a result of that the economic activity is going to take the hit, and that's what we are seeing in this indicator reading for the month of November, and it is going to last for at least next couple of months. Of course, now there is this positive momentum, positive news flow coming in on the vaccine front, but it will be at least a couple of quarters till we see some sort of normalcy coming back into the people's lives. So that's not going to be the case anytime soon, and we are likely to see the continued negative adverse impact being prevalent on the economic front. Later in the day, we are also scheduled to get the US housing data, in which we are going to get the Case-Shiller home price data, both in terms of year on year as well as for month on month, in terms of uh, in terms of month on month for the month of September. And at the same time, the house price index data is also going to be released, both in terms of month on month as well as year on year for the month of September. And here the growth is being expected, and the pace of growth might be somewhat slower compared to the prior month's reading, but September is going to be good month. At least the housing sector is performing well in United States, and that's a positive sign for the economy as a whole. Now let's shift our attention to the technical aspect. First, we will consider what's happening in the Euro USD, and then we will also see the trajectory, the economic and fundamental developments which are having an impact on the USD JPY's technical trajectory. So let's get started with the Euro USD's technical outlook. This is the daily time frame chart, and as you can see, the Euro USD has been consolidating for almost 3 months now. After getting closer to this 1.18 level, it has entered into a consolidation phase, and for last couple of months, the range has been around 300 to 400 pips. And after successfully finding buying momentum on the lower side at this crucial support zone of 1.16, I think now the decks are cleared for the Euro USD to get past this immediate hurdle and fly towards this 1.2, which is going to be the key level to watch out for in next couple of sessions. But in the immediate term, in the near term, we will have to also watch out for this immediate swing high, the swing high established around 1.192, and if the Euro USD is able to get past that level, then we are pretty much on course to see the Euro USD getting towards 1.2 level. So if we want to figure out the opportune time to get involved, I think we will have to see what kind of levels we will be able to get involved to minimize our risk. And for that, I think the prior swing lows and prior swing highs are going to play important role. Of course, yesterday's moves were pretty sharp, and this fall and then afterwards this recovery happened in no time, and as a result of that, not many people might have been able to get involved for this long side trade around this immediate swing low, which is going to be acting as the near term support. But we saw that this first resistance, which was broken earlier in the month, now acting as the support, and I think this is the price level which can be used as the marker for upcoming sessions, and as long as the price is above 1.18, we can be fairly confident of the continuation of the upward momentum in the euro USD. But that's going to increase our stop loss if we go for the market value entry, and if we keep the stop loss anywhere closer to this first hurdle, the R1, then I think the stop loss is going to be fairly wide, and on the upper side we are targeting the level of 1.12, and the risk reward ratio is also not going to be that good. We basically look for the risk reward ratio of 1:2. So here we will have to be a bit more patient and see if we can get better prices for the euro USD's entry, and for that we will have to even rely on the lower time frame charts of hourly. Here, the only thing we can use is the confirmation factor. Both these technical indicators, the regression curve as well as the pivot point series, is pointing towards the continuation of the bullish trajectory, and as a result of that, we can look forward to continuation of this upside momentum, and in anticipation of that we can try to get involved for the long side trade. And I think in that pursuit we can rely on these three key SMA confluence, the three key SMAs of around the price around 1.185 is looking highly important in today's session. We have this convergence happening closer to this price zone, and in the near term I think this is the price area you should watch out for. Of course, that's almost 40 pips away from the current valuation, and given the fact that we saw these renewed buying starting closer to those levels, it is going to be fairly difficult for any new traders to see this euro USD's price dipping towards 1.185 in today's session itself, and that's why I said that we need to be patient here. Otherwise, the stop loss is going to be a lot wider, as we will need to keep the stop loss anywhere close to this prior closing low, yesterday's closing low, which is there around 1.181. So if we want to get involved, I would say that this is the price area to get involved, the price range around 1.185 to 1.186, while keeping the stop losses around 1.181. That's a stop loss of around 40 to 50 pips. And on the upper side, the target can be kept anywhere below the 1.2 level, and the risk reward ratio would be good enough for us to take this risk. Of course, we can be wrong in any trade, and we can be wrong in this trade also, but I think considering the bullish momentum which we have seen in the euro USD in recent past, and this swift recovery after this decline, is a testimony to the fact that the buyers are willing to take the bait, and as a result of that, the euro USD has been able to sustain even after the prolonged rally which has already happened in the euro USD in the first half of this year. Now, in anticipation of its bullish trajectory, the levels which I have sorted out are good enough, and I feel if we are fortunate enough, if we see some sort of correction and consolidation, the 50 SMA might even inch higher, and we can even think about getting involved closer to the 50 SMA zone if the price action is closer to the 50 SMA level in coming sessions. Then we can also look forward to that price entry zone. Now moving on to the USD JPY's technical outlook. This is the daily time frame chart, and the USD JPY has been on this journey downhill ever since this high around 110, and for last couple of months it has been continuously forming the lower highs and lower lows. This time around also has not been exception. Of course, after the AstraZeneca vaccine trial results were released, we saw this sharp move on the upper side, and that's because the AstraZeneca vaccine is easy to handle, and it is going to be a lot cheaper also. So that is going to help a lot of poor countries around the world, and as a result of that, we saw this big move happening in the USD JPY, and the USD got renewed buying, and we saw 81 inching towards 104.5. Even in today's session, I feel the residual momentum is still there, and any trade if you want to take is preferably should be on the long side, not on the shorting side, even though from a longer term perspective, the formation is still clearly bearish. But from scalping, I think we can indeed take the bet and see if we can profit from these changing dynamics in the market. So if you consider the regression curve, we have this flattening of the regression curve as a result of this prior swift move. When the Pfizer's data was released, we saw this sharp acceleration happening in the USD JPY, which had taken the USD JPY closer to this 105.6 level. Then this correction happened, and again now the renewed buying momentum is coming there, and these immediate swing lows, this consolidation phase lows, can be utilized to keep the stop loss just below these levels, and on the higher side the prior swing high can be targeted. So risk reward ratio is also in our favor, and if you consider the pivot point series, the formation is not that good for the long side trade. But I think given the fact that the USD JPY has found support closer to this first support of this month's pivot point series, we can indeed think about getting involved for the long side trade while keeping the target closer to this central pivot point of this month's pivot point series. And if the USD JPY is able to hold onto its gain, and if we see some sort of consolidation in next couple of hours, then that is going to give us good risk reward ratio also, and we are not taking undue risk either. So we can indeed look forward to the possible move of USD JPY on the higher side towards this 105 level from its current price level of around 104.20. So if you want to go for any trade, we will have to make sure that the stop loss is fairly sharp, and for that matter, this prior swing high area around 104.2, and the lower confluence zone of 50 and 100 SMA, which is there around 104, is going to be helpful. And as long as the price is holding well around 104, I would say that it will be better for us to look for the buy trade while keeping the stop loss anywhere closer to this immediate swing low. So for a risk of around 30 to 40 pips, we can target on the higher side even more than 100 pips here, as we are looking at the USD JPY's possible move toward the prior swing high, which is almost 150 pips away from the valuation which we are seeking for the entry in the USD JPY. And as a result of that, we can be pretty assured about the ratio and also the risk we are taking, and given the fact that many of the factors are now in support of the USD JPY's possible move or continuation of the higher side bullish side momentum, I think we should take the chances and see how things go. And in coming sessions, we might see this turnaround happening in the USD JPY, and then for next couple of weeks, we might even see the USD JPY rising towards 106 levels. So that's it from my side for today's session. If any of you have any query or any idea to share, you can write it in the comment section, and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. Have a good day.